to How to Be a Money Magpie, the podcast from MoneyMagpie.com. I'm money expert Jasmine Birtles, the founder of MoneyMagpie, and this podcast series looks at all sorts of aspects of money, from freebies to investing, and from holiday tips to ways to set up a business on the side. And today we're tackling one of the questions on everyone's lips right now, which is, what is Bitcoin and cryptocurrencies generally, and should I invest in them? And to answer these questions, I'm joined by my friend Gary Nuttall, who was recently voted, now Gary, you're going to have to help me with this, 17th most important? Tell me what it was you were voted.
So it was in the Thinkers 360 global thinkers and innovators around cryptocurrency, and I was 17th out of 50.
See, that is really impressive. Just that anybody was anywhere in a list to do with cryptocurrencies is just stratospherically intelligent as far as I'm concerned. So that's why you're here on this programme. So obviously you're not going to get anything wrong.
Well, certainly what I am going to offer is that you can spot real experts because, first of all, they will admit that they are not experts.
Yes.
So I definitely count myself in that. I describe myself more as a luminary in that I cast bright lights on dark things.
Nice.
But also I'll throw in the other caveat that anything I say in the session is not financial, legal, or taxation advice.
Very good idea. Yes, I think I should say that as well at the beginning of my podcast or anything. None of this is actual advice, because it isn't, frankly. It's ideas, lots of ideas that we're sharing with each other. Some could be wrong. And that's always the thing with investing, isn't it?
Exactly right.
So let's start with the big one, the big question. Bitcoin, how does it work? What is it and how does it work?
Okay, so I'm going to offer as simpler as explanation as I can, and it will end up with buzzwords in it, and I'm sure we'll explore what those buzzwords are anyway, such is the nature of it. But Bitcoin, it's a 21st century form of a digital money or currency. So it's what's known as a cryptocurrency, and so rather than being backed by a government, which is what traditional money is, it's backed by a governance process of a distributed network of computers around the world that use complex maths to secure everything through what's called a blockchain. So there we go. Within a couple of sentences, I've already introduced several buzzwords that we can go into further. But ultimately, we just need to remember it's not considered by the UK regulator as money, which is why I said it's a form of money. So it doesn't benefit from any of the protections of traditional financial instruments, such as the Financial Ombudsman Service or FSCS or anything like that. However, it is definitely the way that things are going as we look at digital currencies and digital money, and we can explore the differences of those later as well. And it's definitely a lot of interest. I discovered recent research report in the UK by the UK FCA that over 5% of the population in the UK now hold cryptocurrency in some way. So I was quite surprised just how high that was.
Well, yeah, I'm one of them. Yes, I mean, like you say, I do think it's the future of money. It's just another iteration of the movement of money. We started off with barter and shells, and I mean, it must have been when people first came out with paper money and coins and things. Other people might have thought, well, that's not a sheep. That doesn't look like a sheep to me. And then, of course, when credit cards came in, I'm sure people said, well, that's not money. Each time I think vast majority said, well, that's not proper money. And then gradually they go, oh, right. Oh, you'll accept it, will you? If you can use it and someone will give you a sandwich for it or whatever, and you go, oh, all right, then it is sort of money.
And that's exactly what Bitcoin allows, amongst other cryptocurrencies as well. It allows us to transfer value directly, either face-to-face or over the internet, without needing a bank or a payment service provider. And that's what's really exciting about it for people, because it means that we can deal directly.
You see, to me, in a sense, that's the most interesting part, certainly at the moment, as you say, the decentralized element of it. So the fact that you don't have a central authority, a government or a Bank of England or whatever going, yeah, that's worth that, stamp. You literally don't have anything like that. It is all spread about on millions of computers around the world, and each transaction is ratified essentially across these computers all over the place, and that's what says, yes, that transaction has happened, and yes, it's done. You can have whatever it is, because people actually do buy things with Bitcoin. I mean, we're just talking Bitcoin at the moment, but they actually do buy things with Bitcoin at the moment, don't they?
That's right, and it also varies from country to country as well. So you find in the UK, the opportunity to buy things directly with Bitcoin are still quite limited. I remember going to a burger bar on Brick Lane in London in the East End, and it was a burger bar called Bitburgers. And you could actually use Bitcoin to buy your burger and so on. That was a few years ago. You look at recent news, there was a case of somebody buying a property in Dubai with Bitcoin. So different countries have different appetites for it. And also you find that the less stable the country is, the more willing the population is to use cryptocurrency. So I think Venezuela, for example, is very much into cryptocurrency, because one of the features of a cryptocurrency is that it's decentralized and distributed, as you say, which makes it censorship resistant and means it doesn't rely on a government. And I've had that conversation with people, and this is where they get uncomfortable about, well, what makes cryptocurrency worth what it is, compared to a pound note? And if you look at a pound note or a £5 note these days, the reason £5 is worth £5 is simply because enough people believe it is, and that concept, that belief, is backed up by the government, the Bank of England, and central bank and everything. If confidence in the government goes, confidence in the money goes, and it loses all its value.
And I do get a sense just at the moment that actually confidence is being little by little bit chipped away, even in what we might call, the developed countries like Britain, particularly like America, because of all the quantitative easing. And that's essentially what produced Bitcoin in the first place, wasn't it?
Because you're right. So the first Bitcoin block, as it's known, actually includes in it a couple of sentences out of the Times from 2008, I think it was, which was the time of the last global financial crash, which said something about the banking system and so on. So Bitcoin was seen as a kind of a libertarian response to the banking system, and it seems that it's going that way again. And also we have the thing that the world is a very unstable place right now, whether it be because of what is going on in the USA or COVID or climate change or what and Brexit. There are so many things, and quite often when there is uncertainty in the world, capital takes flight. It goes to secure and safe things. So gold is a classic one, or other precious metals like silver and so on. And there appears to be an element of that at the moment. And I won't be 100% because I don't believe that you can ever prove correlation between something happening in the world and cryptocurrency, because it doesn't quite behave that way. But certainly the price of Bitcoin in particular lately has been rising in line with the increasing uncertainty of the planet. So it may well be that people are treating it as a safe harbour.
Yeah. Why? Why would they choose? Why would they go to Bitcoin as a safe harbour?
So it's because you can't hold it. That is actually a feature and a benefit, because that means it can't be confiscated. The thing about a gold bar is you need to store it somewhere. So you can stick it under your bed, in which case it could be stolen, or the government could come on, knock on your door, depending upon which country you're living in, and it can be confiscated. Or you hold it in a custodial service with a bank who've got a nice big bank vaults or whatever, or safe. You stick it in there, and again, it can be taken. So if we look at what happened a few years ago in Cyprus, for example, where people had their money in banks, and then overnight the Cypriot government did a haircut on the bank accounts and took 20% of the balances off them. So you can do that with physical things. They can be confiscated. It's much, much harder to do it with digital things. So one of the features of cryptocurrencies is censorship resistance and the difficulty to confiscate it.
So you really think that if you and I have Bitcoin or whatever, and things go horribly wrong with the government and they start taking people's money out of their accounts, they actually couldn't access our Bitcoin?
It would be incredibly difficult. There are still ways of them switching off access to being able to buy and sell Bitcoin by switching off the on-ramps and off-ramps to your bank accounts, for example, which is what they already do, and they control that. They could potentially limit access to networks and so on, but ultimately what you can do with a cryptocurrency is you can actually literally print its details out on a piece of paper, and it effectively becomes a bearer bond. That piece of paper has value. It's not intrinsic value, it's implied value, but you could then exchange that piece of paper with someone in the local Starbucks and nobody anywhere would ever need to know about it.
So they've just got your code, and then they'd put that code into their crypto wallet or something, would they? Is that how it would work?
Correct. There's kind of three really important things around this. So you have what's called a private key, which is, it's a bit like the password to your email account. And without that, you can't access anything. You can't send messages or anything like that. That is then cryptographically converted into what's called a public key, which is still quite secretive, but not so much so, which is a bit like your username in a way. And then that gets converted into a wallet address. So that's a bit like your email address. So if I wanted to send you some Bitcoin, you tell me what your wallet address is, and I send it to that wallet address, and then you can only access it with your private key. So it is a little bit different from traditional banking there, but there are similarities that ultimately you can send things to each other's wallets and so on without an intermediary. It's just going over the network.
So you've mentioned buying and selling Bitcoin and other cryptocurrencies. I mean, this is something that I've done, and I've gone onto exchanges. So that's the one way I know of getting them. But then there's what they call Bitcoin mining, which is an interesting one. So can you explain sort of these two ways of getting Bitcoin if you want to actually have some Bitcoin yourself?
Sure. So I guess we need to explain what crypto mining is. And this is what underpins the blockchain and what makes it a totally trusted system. So imagine a group of computers around the world who are all competing to solve a complicated puzzle. And it's a very complicated one. And this puzzle is set every 10 minutes. And every 10 minutes, all these crypto miners, who are either these individual computers or complete networks of computers, get together to solve this complex puzzle. And whoever solves it first is rewarded with Bitcoin. It's 6.25 Bitcoin. So this is how new Bitcoins are minted. So they get rewarded 6.25 Bitcoin, which, given that the current price of Bitcoin is $35,000, multiply 35,000 by 6, and that's how much they get rewarded for it. But the computing power to win that competition is massive. We're now seeing like mining farms in China, Canada, but particularly the colder countries, interestingly, where they can access hydroelectric power and cooling systems now, that they create this currency by taking part in this massive competition. So in Bitcoin, as I say, create 6.25 Bitcoin at the moment. Every 4 years, that reward halves, which introduces an economic incentive. The old demand exceeding supply means prices will generally go up. And that's kind of how it works on that. So yeah, you could take part in what's called a mining pool, because my laptop originally was powerful enough to compete in this competition. Nowadays, it doesn't stand a chance. So what we could actually do is we could pool our resources together, and we could do that. Most people don't do that, and to be honest, I find a lot of people, they get involved in mining pools. A lot of mining pools are scams. The ones to watch out for is where someone approaches you and starts with a conversation with, what do you know about crypto mining?
Yes.
Which I love it when they've done it via LinkedIn and they see what I do, and the first thing I ask is, do I know anything about cryptocurrency? And then the next thing, and this is the red flag for me, is as soon as they guarantee returns.
Yes.
As soon as they say we can guarantee something,
it's
game over.
Yeah.
You just know it's a scam.
That does lead us on to the whole thing about Bitcoin scams. I mean, I just assume right at the moment, because Bitcoin's up. I mean, it's up and it's down and it's up and it's down. Then there are, and they're going to be, loads and loads of Bitcoin and general cryptocurrency scams around, aren't there?
There are, but interesting, that's no different from traditional financial scams. Crypto is mimicking what the traditional financial services industry already has a problem with. Crypto is not unique in having these scammers out there. So yes, absolutely, you do have to tread with care. You do need to be careful about who you deal with, and just be very careful, and be aware as well, there is no comeback on this. It's a decentralized world. Whereas if I have a problem with my bank account, I can go down to the local high street, speak to a bank manager, That does not exist in the crypto world. You are on your own, and that's why I run various community groups now to help each other with this kind of thing. But quickly whizzing back to your point about where can you get cryptocurrency from, so where you can buy and sell it from, you're right. The main one is exchanges or service providers. The other one increasingly is bank ATMs. So there are cash machines now around the country. In the UK, there's about 16,000 where you can actually just go up to an ATM, give in some details, and you can buy Bitcoin from a machine. The commission rates are very high, which is something to be aware of, but that's an alternative way. Or the other way of doing it as well is you can simply meet up with people and you can exchange it directly. And I've done that with people I know in coffee shops where we can just point our phones to each other's phones, scan the QR code, which gives us the wallet address of each other, and we transfer like that. So that's another way of doing it.
Wow, that's amazing. I didn't even know you could do that. I mean, I just buy on exchanges, and I do say to people, be careful with the exchanges as well, because a lot of dodgy ones have come up. I mean, the ones that I tend to recommend are Coinbase, Binance, I think it's Binance or Binance, and Bitfinex. Those are the only three that I know are genuine. So those are the ones that I mention. Others I've heard of might be right, might not.
I recommend for people who are first looking at this to join the ones that are as simple as possible. So you've mentioned Coinbase, which is a great one. I actually use blockchain.com, which is a really, really simple one. You can just buy and sell Bitcoin and not much else. You're right that there is Bitfinex. There is also Kraken, which is for more advanced people generally. And once you start getting into buying and selling, that kind of thing, they're quite good ones. But it's all a trade-off between the level of sophistication and the ease of use. I always say to people who are moving into it to begin with, go for the ease of use. Stick with something really simple. Try small amounts. Just have a dabble and use it as a learning exercise.
And of course, it's not just a Bitcoin. We're talking cryptocurrencies generally, and there are a few thousand of them, aren't there? But there are only a few that people are taking seriously at the moment. The number 2 from Bitcoin, of course, is Ethereum. Can you explain how Ethereum works? Because it's not quite the same as Bitcoin, is it?
So it's kind of Bitcoin on speed. So its origins come from the same principle of Bitcoin. So it has crypto mining, it has a blockchain with a digital ledger capturing all the records now. But from there, the similarity ends. And Ethereum is kind of Bitcoin version 2 in a way. Ethereum introduces a programmable capability. So that means you can then create not cryptocurrencies, which is what Ethereum is, as well as it being a blockchain, but you can create tokens which are programmable. So what this means is you can create programmable money.
Yeah.
So imagine a £5 note, but it's a £5 note that you can only spend at certain times a day, or with certain places, or for certain purposes. So UK government actually trialled this as an experiment in 2016 in the north of England as a way of paying, I think it was housing benefits. You can only use it to pay for actual renting accommodation, that kind of thing. So you've got kind of 3 subsets. You've got a thing called crypto assets. So that can be any type of a crypto thing. And this is tied in with the UK FCA, who come up with these regulations as well. You've got cryptocurrencies, which is what we're talking about with Bitcoin and Ethereum. You've got crypto tokens, which is like programmable money. So it's a bit like loyalty cards or loyalty points in a way. And then finally, you've got crypto assets of another sort, which is where they act as a representation of financial ownership or digital ownership of something else like gold or property. So it's a bit like a bearer bond in a way, that there are companies who now you can buy a crypto token that represents fractional ownership of either a property or of gold or of a luxury car for that matter.
Or art. I've heard people buying bits of a posh painting.
That's right. There's real growth market. So there's this whole thing called fractional ownership, which is growing, and this is what blockchains enable in particular, of this ability to have fractional ownership of something that you couldn't own outright. And what that does is it opens up those kind of things to more people. So as you say, works of art. I love Canalettos. The Queen has got most of those, and I certainly couldn't afford one myself. But the potential to own a fractional little bit of one would be fantastic, and I could do that. And it creates a whole secondary market of buying and selling and that kind of thing as well. So yeah, it's an interesting space. There's so much happening with this.
And what about long term? Because obviously you've got cryptocurrency as an actual currency that you use to actually buy things. But also, I think the main reason, surely, that Bitcoin in particular, but also Ethereum, has gone up so much just recently and up and down, is because it's seen as an asset for later on. As you say, like gold. Do you think that, if somebody is looking to put a few quid into something different, is it worth a punt for the long term?
So you remember I said I started with I don't offer financial advice.
Yes.
So I won't say if it's worth a punt, but I will say a few opinions on it. So if you look at Bitcoin, August of last year, one Bitcoin, and there's no such thing as one Bitcoin actually, that's a notional thing, but was worth $10,000. Now on the 1st of January, it went up through $30,000, so it tripled in 5 months, which I don't know what your pension plan's looking like at the moment, but that is not a bad rate of return.
Absolutely, yeah.
And then on the 8th of January, just a few days before now, it peaked at $42,000, which is incredible. And then in the last couple of days, it's dropped below $31,500. So it's lost 25% in just over a day, but it's also gained several 100%. So this is the thing, and this is why the FCA, whose remit is to protect consumers, is very concerned, because cryptocurrency can be incredibly volatile. Yes, you can make money on it. Yes, you can lose money on it. But going back to your point about longer-term opportunities, if you look at Bitcoin originally in 2009, it was worth almost nothing. And in fact, the first transaction of it in May 2010 was somebody who bought 2 Domino's pizzas, in fact, and they paid 10,000 Bitcoin for those 2 pizzas. So if you think about that, that's 5,000 Bitcoin for a pizza. Bitcoin's currently $35,000, so I can't remember the numbers, but that's several million pounds. So I do hope they had the pizza with all the toppings on.
Yeah, I really do.
When you take a look at Bitcoin each year, it does seem to keep going up consistently. But as I say, as the old FCA always said, you can't use past performance as an indication of the future. And I'm sure they will keep saying that as the price of crypto keeps going up every year. So it's something, it is certainly worth considering. And it is highly risky, but if you're willing to take a risk in some way, and you're aware of that, and you don't invest more or put more in, because I'm cautious about using the word invest. If you don't put more in than you can afford to lose, then why not? Have a go type thing. But it is entirely up to you to make your own decisions.
And as you say, yes, it is entirely up to the individual to make their decisions. And what I always say also is never invest in anything you don't understand. So it might take a few weeks, months, whatever, to really at least basically get your head around what Bitcoin is and how it works and how it might work in the future. And once you've got enough and you think, oh, go on, I think that's got legs, then yeah, put money in. If you don't, if you think, it's never going to take off, and I've certainly heard that from various friends, never going to happen, then don't. Go and put it in gold. Yeah.
It's interesting, though, the motto you follow is the same as Warren Buffett's, I think. So I think he said with Berkshire Hathaway, I never invest in anything I don't understand. So you and he are clearly on level terms.
Well, clearly.
But the reality... However, I kind of argue with Bitcoin, it's useful to know a little bit, but you don't need to know a lot about it. So yeah, read up on it, get comfortable with it, but don't start reading in-depth books on it and getting too deep, because you will end up down a complete rabbit hole and you'll never come out of it. You'll forget to buy anything and then the price will have gone up.
Very good advice. Not advice. Very good ideas there. Very, very good ideas. Now,
thank you.
Now, if you're a regular listener to this podcast, you'll know that we always get ideas and thoughts from some of our money magpies, and today is no exception. Our producer Jenny has been speaking to Aditya Negasheth, a full-time investor and crypto fan, about the cryptocurrencies that he's invested in and why.
My name is Aditya, and I've been investing into cryptocurrencies since 2015 and have made over 70 to 80 different investments. I try to invest early into newer technologies in blockchain, but I also own some of the larger cryptocurrencies like Bitcoin and Ether as well. I think for buying cryptocurrencies, the easiest way to do that is probably to have an account with one of these centralized exchanges like Coinbase, for example. I think they are regarded to be most trustworthy over time. One could also access certain investment platforms such as eToro, or the newer banks such as Revolut also offer similar services as well. So I think now, there are multiple options that one could look at to get access to buying cryptocurrencies. My preferred choices are Coinbase and Binance. I think Bitcoin's definitely finding its first use case right now. There are more and more institutions around the world who are accepting the fact that Bitcoin could become a store of value, which could be something like digital gold. I think with regard to the rest of the cryptocurrencies, Ethereum, of course, has the maximum developer mindshare. And that's where a lot of innovation is taking place, not only on Ethereum, but you got secondary layers where a lot of transactions can be done almost at the speed of Visa or any of these other centralized rails. I think before buying, one should definitely experiment and try to play around with the technology as much as they can. And this could be as little as just reading the white paper, or at least playing with a paper wallet, even if you don't transfer any of your Bitcoins into it.
So Gary, Adi is saying basically the same as you, that it's a good idea to just start with Bitcoin and Ethereum, whatever. But there are some other ones, aren't there? There are some other sort of fairly sort of up and coming cryptocurrency names. Which ones do you think are worth watching?
So you're absolutely right. It's a little bit like how in the traditional money world, we've got, I think it's about 170 currencies around the world. So, pounds, dollars, euros, that kind of thing. So there are over 2,000 traded pairs now of cryptocurrencies. You're right that the big one is Bitcoin, which actually represents about 2/3 the entire market capitalization of all cryptocurrencies. The next one to follow is Ethereum, which you mentioned already. There are others as well. There's Litecoin, there's Bitcoin Cash, there's what are known as privacy coins like Zcash and Monero. Challenge with privacy coins is that a lot of them are being delisted from exchanges at the moment because of various regulations coming in. There are others that are specialized in certain areas. So there's one called IOTA, which is to do with Internet of Things. So there's a whole range of things. And the best thing is to read up on some things. So I would agree with the thought about, take a look at the education material that you can get on the likes of Binance and Coinbase, where they produce some really good guides. I would actually argue against getting too technical and beginning to read white papers. I know how to spend a £5 note, but I don't need to know the origins of how fractional reserving works to mean that worth £5 type thing. Another good point as well, I think it has been raised, is that you don't need to buy a whole Bitcoin. So I had that brought home to me that I completely forget about this at times. Bitcoin is currently about $35,000. And so it's unlikely, it's a bit like saying, oh, go and buy a gold bar. A Bitcoin, in terms of unit measure, can be broken down into what are called sats, which are Satoshis, which is after the author of the original white paper, Satoshi Nakamoto. And we don't know who she is or who they are, even to this day. So the bottom level, like you have pounds can be divided into pence or dollars into cents. And a Satoshi is 100 millionth of a Bitcoin. So people talk about how there's going to be a limited supply of Bitcoin eventually. It's actually programmed into the blockchain protocol to be 21 million as a maximum. And so everyone's saying, oh, well, there's only going to be 21 million Bitcoins. So that means there isn't enough for everybody. But you actually slice each of those Bitcoins up into 100 million little Satoshis. So you can buy, £50 worth of Bitcoin or even £20 of Bitcoin. It's just that the commissions that you'll pay means that that's probably not economically effective. And yes, there are lots of the cryptos out there. The best bet is to go onto a website, something like coinmarkets.com, which is great because it lists off all the cryptocurrencies and crypto tokens that are regularly traded, gives the current prices, and has lovely little graphs about whether they're going up, down, or sideways.
Boy, do I understand a lot more. Just listening to you for a few minutes, I go, oh yeah, I can see that now. It's really, really helpful. Thank you so much for coming on, Gary. That's Gary Nuttall, 17th most knowledgeable according to 360 in the crypto space. You've heard it here first. Thank you. That's your lot from us today. Don't forget to follow us on Twitter and Instagram. And our handle is, of course, MoneyMagpie. You can follow me too on Twitter. I'm Jasmine, just Jasmine. And on Instagram, I'm Jasmine Birtles. If you have a story you'd like us to feature or a burning question, head over to our message boards on MoneyMagpie.com and put it there. We'll get back to you as soon as we can. Now, today's episode was presented by me, Jasmine Birtles. My guest was Gary Nuttall and the producer was Jenny Birtles. The music was composed for Money Magpie by Thomas Hewitt Jones.